For more on the markets, we want to bring in Ann Bartels. She's the chief investment strategist at Sanctuary Wealth. And Ann, you do think that we're going to get to 6,000 on the S&P 500 by the end of the year, but it may not be a smooth ride between here and there.
That's correct. I mean, there could be some investment inertia. You are seeing some hedges, as Mike just pointed out. So we could have a little bit of volatility, but I don't think investors should really be concerned about that. I still think, with the Fed now recalibrating, going to an easy monetary policy, the economy still growing. We're at full employment, albeit employment has been slowing. But more importantly, corporate profits are growing. And, it's early in the earnings season, but so far, earnings are beating by 5%. So I think the investment outlook and the fundamental outlook and the technical outlook all align. That's going to allow the market to continue to rally as we go into November and December. And yes, we do think the S&P can reach 6,000.
And we did get a step closer to that on Friday with a new close above 5,800 for the first time, 5,815. So that target is looking less and less distant. Ann, we had Tom Lee on with us earlier, and he thinks that the market could behave a little bit better if it looks like there is going to be a clear winner for the presidential election. He said markets don't like uncertainty. They don't like neck-and-neck races. Would you agree with that?
I would 100% agree with that. I'm not sure, though, whether or not we're actually going to get that clarity. But what I've been saying is once we know who the declared winner is, I think there can be a relief rally that the market finally knows who the president of the United States will be. And the concern is not just here in the United States, Becky, it's also overseas. Overseas investors are also very concerned about this election. So it's not just domestic investors that can buy the market. I also see foreign investors having the ability to come here and continue to invest.
Let's talk a little bit about the Fed, because obviously that's one of the huge issues that you pointed to, too. CPI and PPI were a little hotter than expected. If the Fed decides that it's going to go on pause, what does that mean for the short term? I realize longer term we may still be headed in that same direction, but if it puts a little bit of uncertainty back into the picture for investors, what's the reaction?
Well, that's where you get the bucking bull, right? That's where you get a little bit of that volatility. But all it is the bucking bull. In fact, our year ahead thesis was that both the fixed income market and the equity market were going to both have positive returns, but you were going to buck getting there. So it's just a little bit of bucking, but the trend is clear. The trend remains up.
And you would buy any dips, not just buy any dips, you'd buy now, even when we're up 9 out of the last 10 sessions.
I absolutely would. And, if you look at the NASDAQ and you look at technology, they're still in that consolidation phase. The NASDAQ hasn't hit a new record high. I still believe that technology is the leadership of this market and that semiconductors remain the leader of the pack. So if you're looking to actually get into technology, I do think that this is the right time to invest.